Hi, this is Apurva Chesaman. You are back with me on G for GST. You know what we do? We make videos on GST. Our videos cover a broad spectrum starting from bare basics to intricate nuances of the GST laws. And you know what you should do? Hit the subscribe button now. GST turns 5. It's GST's happy birthday. Now, in this past 5 years of GST, if there was one topic that has been a matter of intense debate, discussion, and deliberation, it has been interest under Section 50. Now, back in 2020, back in that day, interest had once again attained the limelight of GST Council's attention. So, what happened then? You can watch it here. It's linked up right here. Now, after 2.5 years of that event, especially, GST and interest under Section 50 is once again back in the limelight. Why? What happened then? What happened now? Is there an amendment in Section 50? All of this we will discuss. Let's dive deep into the gamut of changes. First things first, let's get the basics out of the way. What does Section 50 talk about? It talks about interest payable. Now, how much interest should I pay? It depends upon what you have basically done. Have you delayed filing your return? Or have you defaulted in tax payment? Or have you unduly availed excess ITC? Or have you utilized ITC as well? Basically, how much interest you have to pay depends upon what exactly has gone wrong. Case 1. There has been a delay in filing GST return. Oops. That does happen sometimes. Now let us say your GST return could not be filed by 20th of every month. Then what's the worst thing that's going to happen? Is that you have to pay interest at 18%. That too only on the net cash component of your GST liability. Finally, thankfully, that has been long settled. No more questions entertained on this. We have done a detailed video on this which is linked up here. You can go watch it. Let's move on from here. Case 2. Return has been filed on time, but a couple of invoices were missed in reporting. Oops, that also does happen. So it sometimes happens that you file a return and at a later point of time you realize that a couple of invoices were never reported. Tax on those was never paid. Now this could be identified immediately in the next month or sometimes probably in your year-end reconciliations. But what has essentially occurred is that the return has been filed without complete tax payment. So eventually when you choose to correct this error by reporting these invoices at a later point of time, do you have to pay interest on this becomes the main question. Well, the answer is a big yes. So what has basically occurred is that you never reported certain liabilities and eventually because of that you never actually paid these liabilities. Now when you decide to fulfill these liabilities by reporting these missed invoices at a later point of time, interest under Section 50 at 18% per annum does get triggered. The tricky part here is that do you have to pay interest on these missed invoices even if at a later point of time the due GST liabilities were fulfilled only by using ITC? Well, the answer is a bigger yes. So even if the tax liabilities on these missed invoices were eventually paid off only using ITC, you never had to pay a single rupee in cash, even then interest under Section 50 gets triggered and you have to pay interest at 18% per annum on this missed GST liability. Because what relief Section 50 has brought via the 2020 amendment is that interest need not be paid if there has been a delay in filing the return and there is no cash liability. But what has actually occurred in this case is that tax liability has never been reported and tax dues have never been paid. So that 2020 logic you can't come and apply here in your case where you actually missed reporting a couple of invoices in your return. Now that's enough of Section 50's prior amendments. Let's actually focus on the core issue of this topic, which is interest liability dues to be paid when there is undue or excess availment of ITC. Now, in the past 5 years of GST implementation, there has been a lot of debate by the assessees as well as the counter arguments by the department as to how much interest has to be paid and whether or not actually interest has to be paid when there has been any undue or excess availment of ITC. Well, thankfully, Finance Act 2022 comes to our rescue again, and Section 50 is proposed to be amended again. So, in this amendment of Section 50, it is proposed that interest would not be liable to be paid if there has been only excess ITC availment, a mere availment without corresponding utilization. So essentially now it means that, let us say you did avail some undue excess ITC. So for example, you availed credits which you should not have availed, or you availed credits twice, or you availed block credits, or you short reversed the credit liability. So whatever basically has occurred, there is excess ITC that has been availed by you. In such situations, why did this proposed amendment under Section 50? If there is no corresponding utilization of ITC by you, then there is no need to pay interest. Therefore, to all the assessees, who have availed any inadvertent ITCs in excess and then subsequently identified these errors and suo motu have undertaken reversals, and basically you never utilized this credit that you have inadvertently availed, which means that this credit was all the while sitting in your electronic credit ledger on the GST portal without a corresponding knockoff towards liabilities, then well, obviously you're safe and you don't have to pay any interest. However, if you have committed a bigger sin, a bigger mistake, that is, you not only availed this excess ITC but you blissfully utilized it off against paying your GST liabilities. So which means that that excess credit that you once availed, albeit inadvertently, is actually not even with you. It's knocked off. It's gone from your electronic credit ledger. In such cases, yes, interest under Section 50 gets triggered. But the next moot question is whether such interest due to utilization of wrong credit should be paid at 18% or 24%. Over the past 5 years, the registered taxpayers have been strained numerously, with the department imposing interest as high as 24% for a mere wrong availment of ITC as well. But again, Finance Act 2022 comes to the rescue of these assessees because it is proposed to rationalize the interest rates at a uniform 18% and not the magnum number of 24. So let us say you do end up having to pay interest because you not only availed the credit but you as well as utilized it. In such cases, the interest liability is triggered and to be computed at 18% per annum. Well, the happy news, the wonderful news is that finally, after 6 or 8 months after this interest provision was proposed to be amended, Section 50 amendment saw the light of the day. So after the 47th GST Council meeting that happened just a few days before GST turned 5 years old, so the council brought about immense pressure on the government, forcing the government to release notification number 9 of 22 on 5th of July, giving due effect to the relevant provisions of the Finance Act 2022, which was in turn amending Section 50. Well, the vicious circle has finally come to an end, and the bonanza news is that this has got a retrospective effect from 1st of July 2017, which means in the past 5 years of GST, if you have availed any ITC erroneously, wrongly, inadvertently, whatever it may be, yes, you availed erroneous ITC and you never utilized it, you just reversed it, then all those litigations or cases or show cause notices or demand notices that are standing asking you to pay interest stand nullified. You do not have to pay any interest. Now you know what you have to do to stay on top of your GST feed? Subscribe to my channel and hit the bell icon.